Good morning, everyone. Today is Wednesday, August the 19th, and welcome to 7 Investing Live. This is our live stream event we host on Mondays, Wednesdays, and Fridays at 10 a.m. Eastern Time to put a spotlight on several of the stock market's most intriguing opportunities. We'd love you to follow along with our show. Please subscribe to our YouTube channel, or if you want to check out the URL on that, it's youtube.com/@7investing. My name is Simon Erickson. I'm the founder of 7 Investing. We've been at this for almost 7 years now, picking stocks each and every month and then discussing them out in public forums like this. I'm joined today, as always, by our executive producer, Heather Horton. We also have a special guest on the show today. Ashley Wilson is joining us. She's an expert in the AI space, a longtime friend of 7 Investing. Ashley, it's really a pleasure to have you on the show here today. Welcome to 7 Investing Live.
Thank you, Simon. I'm really excited to be here. I'm pretty excited about what we're going to speak about.
It's going to be a good show. This is going to be a fun one because earlier this month, to key this up, we made a prediction publicly that we saw a company called SoundHound AI that looked like, and I quote, the perfect setup for a short squeeze. That is exactly what happened when the company announced its earnings on August the 5th. The stock went up 33% in the morning trading session. The short-term call options were up triple digits. By all accounts, it was indeed a beautiful short squeeze. So naturally, right after that happened, there were some questions that came in. Simon, what did you see? What did the crystal ball tell you? What do I need to be paying attention to a little bit more often so that I can catch the next one of these that comes around? And so on today's show, I'm going to invite Ashley and Heather to join me to talk about what was it we saw in SoundHound in the business that we liked in the first place. What was it that was the setup for this perfect short squeeze? And then even better than that, what's on the horizon that we think is going to be here in the short term? So we're a little bit more unscripted. This is a little bit less bullet point agendas, but Heather and Ashley, maybe I'll hand it to you to talk a little bit about any direction you'd like to take with this. But let's talk about SoundHound AI here this morning.
Let's do it. Simon, if you pull up the some background for us to take a look at the numbers, because as you know, and I'll let the listeners know, I have a long background in analytics and predictive models, and specifically around artificial intelligence. And I've dabbled in investing. So I have been a retail investor for a number of years, but Simon and I were speaking yesterday, and when he showed me this, I genuinely didn't quite know what I was looking at. A lot of the numbers here are not metrics that I normally track when I'm looking at a stock or when I'm contemplating a buy. And I wanted him to explain it to me a bit and say, all right, what did you see in these tea leaves that I can't see? And furthermore, I was curious if we could even use some of the stronger AI models to find these indicators before they occur. What's possible here with the data. So Heather, what do you see in the tea leaves?
Yeah, so I have been making videos about investing for about 13 years now. So at least I don't have a professional background in investing, but I have a lot of background knowledge at this point. And the thing that we talked about in our last SoundHound episode, which you can find on the YouTube channel, I will link it in the description as well, was the short interest days to cover and how high it was. And Simon, is this the current info? Is it still 5.5 days?
As of this morning, yeah, this is current right now. That's true.
And just how long it would actually take for everyone to be able to cover their shorts. It's in more detail in that last episode, but that's still so long. The opportunity doesn't seem gone yet. Is it, Simon or Ashley?
Well, I'd love to hit that on part 3. Let me start in the 10,000 foot level if it's okay. Just to kind of talk about transactionally what's going on every single day in the stock market, right? And then we'll drill down. We'll get into a second here into the nitty gritty. But on any given day, we always kind of follow the adage, buy low, sell high. Mm-hmm. You always want to buy a stock, you want to hold on to it for a long time, and then you want to see it go up higher in value, and then you want to sell it higher. That's kind of how, we always follow that truism for the stock investing. But the opposite can also be true as well, which is sell high and then buy low. And so we refer to that as a short sell, where people are doing this for every publicly traded stock every day. They think at least some percentage of the stocks out there are from people that believe that the stock price is higher today than it will be tomorrow or next month or later in the year. They are betting on the stock price to go down so they can sell it today and then buy it back at a lower price later on. Now, to facilitate a short sell like that, you have to work with a brokerage that even allows you to do that. Technically, logistically, what you're doing is you're allowing them to sell the stock at the price that you're at today, hold it off to the side for you for a predetermined amount of time in the future, and then you're going to buy those shares back at the end. So to close out a short sell, you are actually buying back the stock that you sold earlier on. This is an important dynamic that those shares are not available when they're locked up into short selling contracts. And so for the most part, this just kind of happens. You would see a percentage of shares that are out there that are just kind of locked up in these short selling agreements. But every now and then there's something that just is like a giant, screaming white flag, red flag, jumps off the page at you, something that just looks egregious, that doesn't quite sit right as an investor. And as someone who's done this traditionally as a fundamental long-term and long-only investor, I've gotten a lot more respect for this giant auction that is happening globally every day with every stock out there. There are certain indicators that you just have to respect that something doesn't look sustainable and it's about to break. And so 10,000 foot level, as we start drilling into some of these metrics, like you were just mentioning, Heather and Ashley, maybe it's worth sometimes at least using these as interesting data points to see, hey, something doesn't seem quite right there. What are the tea leaves, as you said, Ashley, telling you that maybe is worth double clicking on again? And so maybe let's look into a couple of those with SoundHound and the stuff that jumped off the page.
So is there a certain 1, 2, or 3 metrics here that you are keenly watching for across a number of stocks, and that SoundHound really jumped off the page and you said, this, I like what you said about this isn't sustainable. It's going to move in a drastic way. Where would I look first to measure?
Absolutely. Yeah. And so, first of all, this is a shout out to Ortex. The platform that you see in the background is a paid subscription. We're not an affiliate partner with them. We're not getting any kind of sweet deal for talking about them. I just think that this works well. And I'm going to give an unsolicited promotion to them for doing a good job of compiling a lot of this. The first thing that I think is worth paying attention to is on the far, far left there, the short interest percent of free float. Now let's get into a little bit of the definitions of some of these terms. A stock, any publicly traded stock, has a total number of outstanding shares that are available, the total ownership of the entire business. But they're not always all available for being publicly traded. Sometimes you have insiders that own shares based on options or restricted stock options. They can't sell those right now. They're locked up, but they're included in the share count. Sometimes you have funds that cannot sell their shares for a certain amount of time. There's certain things that are just locked up. And then there's a certain number of the shares that are available out there. The free float is the number of shares of the ownership of a business that is available to be traded in the public markets. And the percentage of the free float that is tied up in short interest is the percentage of all of those available shares that are locked up in short contracts. A short contract, again, like we said, you've got a brokerage that's setting these off to the side. You've got a deal where you've already sold them in the open market and you have to buy them back later. Typically, you would see a short interest of maybe 5%. For a larger company, maybe it's 2%. For a really spicy small cap company, you might see a 10 or even 20% short interest as a percentage of the free float out there. If you look over there as of this morning, after the short squeeze even happened, SoundHound is still sitting at a 40% of the free float is sold short. 40% short interest. That is extremely high. In fact, one of the highest that I've seen of any reputable company that I still would want to invest in for the long term. So first thing that jumps off the page, short interest of above 20% is very high. 40%, Ashley, egregiously high in my opinion.
Seriously high. And is there a line in the sand where you say, okay, anything, I know this is high, but once it tips beyond a number, I'm certain, my certainty, Simon's certainty goes way up. I'm ready to talk about it to my listeners. I know something is coming. Is there a number?
I'm going to do my best roaring kitty impression here, right? Let's channel our inner Wall Street bets and talk about like what happened with GameStop. and AMC and all these kind of companies, there was the same kind of tipping points where it was just literally the technicals of the stock, the dynamics of the market were too skewed to one side. And by the way, short selling is just part of the market. You're going to have certain funds that are just going to bet against stocks that don't have any catalysts and be more than happy to collect a couple percentage points every year just by betting against stocks that aren't supposed to go up until they do, until you have a Wall Street Bets that goes out and says, everybody buy GameStop and stick it through the man. Or, SoundHound has got so much selling pressure holding the price down that any whiff of good news is what would cause it to pop. I think that's what happened on the second quarter earnings that came out on the 5th for SoundHound. It was, by all accounts, in my opinion, a very good report. You had new partnerships that they signed. The top line was growing. They were scaling some of their operations. It wasn't knock it out of the park amazing, but it was certainly good enough for a company that was selling at 40% short interest. And the second metric that I want to kind of couple with that is the third thing you see in the box there, short interest DTC, which stands for short interest days to cover. What this means is if you take all of the shares that are traded of SoundHound on a daily basis, its average daily trading volume, how many complete days of trading would it take to fully cover all of the short positions, right? So of that 40% of the free float that is sold short right now, the total short interest volume, the total number of shares, you see 161 million shares sold short right now, that would take 5.5 complete trading days based on average trading volumes to completely cover the short interest. Now you can imagine if something really good happens, how this would be a catalyst for everybody to get out, right? If you're selling short and every time the stock price goes higher based on earnings, based on something really good happening, you want to get out as quickly as you can. You don't want to be stuck holding the bag as the stock price goes from 10 to 20 to 30 to $40. Every dollar you're losing money very, very quickly. But if you can't get out for 5.5 days, that's a lot of buying pressure that suddenly is going to flood for the exits of those short sellers to get out as quickly as possible. Typically at 2 or 3 days to cover, I consider very high. 5 or 6 days to cover, egregiously high. This is another thing that jumps off the page.
So what is causing so many people to believe that the stock price is going to go down and to bet their money on that when the earnings report is saying a different story and indicators look strong for the overall fundamentals of the business?
Which is a great question because short sellers are not dummies, right? They're spending a lot of time researching this. There's reasons that they have that they think a stock is going down. Sometimes it could be excessive debt load. They think they're not financially stable enough. It could be that they just think the bar is way too high for earnings and they've had a history of missing earnings and the stock price falls for that. Could be transitions, management leadership transitions, basically all the same fundamental reasons you would dislike a stock, you can incorporate into why you would take a short position on it. I think for SoundHound, this is one that just is unfortunately right in the crosshairs of manipulation, right? It's a small cap stock, $3 billion market cap, not a ton of trading volume, still kind of, finding its footing on how it's going to compete against OpenAI and Google out there. I mean, there are a lot of factors. If you've got enough money to push a stock price down because you're in a short position, you can kind of work the technicals in a way that would benefit you financially. But again, you can't do it for free. You've got to borrow those shares from a brokerage or some institution that's going to lend them to you for that short period of time where you are short. Right now, the cost to borrow in terms of an annual percentage rate is 9.54% for SoundHound. Pretty high. You're losing money every time you're holding this position open because you've eventually got to close out. It's costing you 9.5% a year to borrow those shares. And then the other metric as we round out kind of the in the trenches and the nitty gritty of the details on this is that utilization rate of 85%. You can kind of see it on the right-hand side there. That means of all of the financial institutions that have made shares available to be sold short, 85% of them are already used. They're already committed to short selling. There's only 15% of the possible allotment of short sales that's even available. And the cost to carry is already 9.5%. It's going to go higher because there's less supply even available for people that want to sell short. So if you want to go short against SoundHound right now, as of August 19th, 2026, You've got 40% of the shares of the free float already committed to short interests. That represents 85% of the total committed shares that are even available for you to do this. It's costing you 9.5% to borrow those shares. You have to pay that if you've got a short position open. And by the way, if you need to get out, it's going to take you 5.5 full trading days to close your position on average. That's really hard to short this stock right now. There's just not that many shares that are even available to do this. It's really expensive, and you've already gotten burnt once on the catalyst from the earnings. I think that if I'm looking at this today, keep in mind we already had the pop. They're on the 5th. They've settled down a little bit more, but it still looks like a very, very difficult stock to short. It still, in my opinion, looks like it's a candidate for yet another short squeeze. We'll see what the crystal ball says here in the short term, but a lot of factors that are favoring the buy and hold rather than the short and get out quickly side of this balance.
I'm glad you said that, because I was looking at it and thinking, this almost looks like, could it squeeze again? And I'm not, you're the expert there, but the numbers look to me like it's creeping back up into those metrics that say, hey, get ready. Could be another one coming.
And always hard, right? Always hard to go out there and stick your neck out and even claim that there's going to be a short squeeze. It's nice to be right once. It's even nicer to be right twice. But, when you see the setup and, you kind of understand the dynamics behind it, it's just not sustainable to have numbers that look like this, even today.
Simon, what is the difference between short interest and shares on loan?
This is a combination of kind of the two things. You don't have to necessarily have short interest immediately on loan from an executed contract. There's kind of like, you can borrow the shares for other reasons too that are not tied up into short contracts at the time. Brokerages do that for a variety of reasons. Hedge funds do that for a variety of reasons. But in terms of the short contracts that are on loan, that are actively out there, you kind of see the difference between the short interest and then those that are kind of spoken for at the time.
Yeah, that makes sense.
So shout out to Ortex, some great data here. Again, you can typically twice a month see a company's short interest on any exchange, NASDAQ, New York Stock Exchange. You report those twice a month. They kind of do a lot of the rounding out and normalizing throughout the month. So you can kind of see on a daily basis kind of how these look. This is proprietary data. I just have really enjoyed it as a complement to fundamental analysis.
Yeah, when you showed it to me, I was very intrigued with these metrics being compiled in this way that help point us to what the market may do next for a certain stock.
Yep, we've got a couple in the studio here with us. If anyone wants to open up for other questions about SoundHound, we can field those here as we're wrapping up the program today. I do think that this one looks a lot like what we saw with Tesla in the year 2020. Everyone thought Tesla was, if you guys can remember this, everyone thought Tesla was doomed financially. They thought it was going to go bankrupt and it wasn't going to be able to fund the Model 3 at the time. And then, of course, it took out a loan. It got the necessary financing. The stock went up 7x in a single year. It was fantastic. Definitely a short squeeze for Tesla in 2020. And then it happened again with Upstart 3 years ago, 2023. At the beginning of the year, it was a very similar dynamic like we saw here with SoundHound. Upstart was at 40% of the free float was short interest of 40% plus. Days to cover was approaching 6 days to cover. It's almost exactly the same setup. And so history doesn't always completely repeat itself, but it certainly rhymes. I'm looking at a lot of the same stuff with SoundHound here in 2026.
I have two questions. First, how would an investor, like a retail investor, play a short squeeze to make money? If they thought one was coming, what do you do to optimize and actually cash out on that?
Yep, and I'm always a little gun shy on personal advice, but I will say there are
generally, how does playing a short squeeze work as a retail investor?
Well, you should subscribe to 7 Investing's YouTube channel. So when we talk about this, it's coming. You can, say, okay, Heather and Ashley and Simon are calling it out on SoundHound. I'm going to pay attention now. You can buy the stock. If the stock price goes up because of the buying pressure from the short squeeze, the shares will appreciate. You would benefit financially from something like that. If you buy shorter term calls, if you want to be a little bit spicier or riskier, those have an expiration date where they could expire worthless if nothing happens, but they're also levered in a way that you get a much more pronounced benefit from a shorter term call in terms of percentage gains than you would from just holding the stock itself. But generally, any strategy where you would see the stock price go up, because to close out a short position, you have to buy the shares. So there's a lot more buying pressure kind of pushing the share price up. That would be something that would benefit from a short squeeze? Great question.
Okay, that makes sense. And then Ashley, how would someone like how would you use you're a data scientist focused on AI lately. How would you use AI to kind of search out these kind of stocks and use that in investing research? Or is that just too big of a question?
No, I think it is. It is part of why I'm in the conversation and trying to pick Simon's brain and borrow his mind, because I
It's
do.
the opposite, actually. Ashley, I'm consulting you and trying to borrow your mind on this, but go ahead. Yeah.
Yeah, it's you've got all these years of expertise seeing the market actually respond, and we often we know where that line in the sand can be. We know when these three metrics are all moving a certain direction and tipping over a number. Once we have that, AI does a phenomenal job interpreting data that it can stand on and say, okay, if only two of these are there, but the third one isn't, then I'm just watching. But if all three go beyond this threshold, now I'm thinking about action steps, right? And so I do think there's a lot of potential here using that level of expertise from Simon to figure out where some other opportunities that look like this in the numbers exist. And it can do that across a wide array of stock opportunities.
And while we're at that, Ashley, you and I have worked together for 7 years professionally now. Anyone who's watching this show that might want to consult with you to talk about AI and building systems to do all that kind of stuff you just mentioned, how can we reach you? How can anyone watching this show get in touch with you?
Yeah, so I'm always around on LinkedIn, Ashley Wilson, and I'm the founder of Jaw Analytics, which is an AI advising firm here in Houston. And we are meeting with new clients now.
Fantastic. I highly recommend, highly endorse. Ashley does some fantastic work with this.
Excuse me. Losing my voice. I will put that in the comments and the description below if anyone's looking for those links.
Yep.
Thanks, Heather.
We have a question from Ravi. Ravi asks, do we have a timeline for when the short sellers can keep this up? Yeah, I mean, so contract by contract, right? You've got a timeline for, it's very clearly specified in each one of those contracts, kind of like just like options, or anything else that's kind of duration limited for stocks. I don't think this lasts more than 6 months. I don't see how you maintain a stock with 40% of shares being sold. Right? You're paying 10% a year, which is already, just to keep the position open costs you money. But then, how many more earnings updates that knock it out of the park can you stand before you just cry uncle and say, I'm closing it out, I'm done with it? People don't like to lose money. There's a lot of money that's betting against the stock right now. I think that SoundHound, I would like to see them strengthen their financial foundation a bit more right now. They've been making a lot of acquisitions. They've been issuing some equities. It's probably a lot of the reason that there is so many people going short on this right now. There's a lot of uncertainty right now, but it's also, this is a red hot market. The conversational intelligence platform they're building is powering AI agents that are doing transactions. They're answering customer service questions for banks. They're doing processing of claims for insurance companies. There's all sorts of neat things that's being done by AI that is built upon SoundHound. And you can do that with OpenAI's solution. You can do that with Google's solutions. They're out there. But there's also some nuance to how we speak versus how we type. And SoundHound has been at this for 23 years of building, the core platform for conversational intelligence. I think it personally either gets acquired or it continues to acquire other companies to get even larger in the next 2 or 3 years.
Reds, a comment on the YouTube video that we did a few weeks ago, talking about specialized AI systems being more efficient than large language model, like general large language models. Is SoundHound more efficient at processing than, say, Claude or ChatGPT because it's more focused?
Yes, it is.
Putting you on the spot.
Give me 1 minute to pull up the numbers on it, and I can pull up the specifics on it. Or you can even just check out, even better, just check out our 7 investing site. I'll leave it at that. Because they built it on NVIDIA's GPUs, they worked specifically with NVIDIA for the models to run optimally. So the latency is much, much lower. The response times are much more quicker. It's a more efficient compute than a lot of the others that are trying to do similar things. And again, there's, people talk in strange ways. It's not the same way as typing something. You can think exactly how to use the right words when you're typing to GPT in a command prompt. But if you're ordering from Jersey Mike's at the fast food restaurant, which by the way uses SoundHound, you might, say, oh no, I wanted to do this. No, cancel that. I don't want that. Oh, I want this, this, and this. Sometimes people even switch the language they're asking for things in at the same time. It's just vocally is different than typing. SoundHound has always built it to be conversational because Kevin, the founder of the company, wanted a way for people to communicate efficiently with machines. He wanted to do this ever since he graduated University of Toronto back in 2000, right? So he's been working on this for a quarter century. And just now the market is going red hot, and it's kind of like the perfect place for the perfect company to do this, in my opinion.
It is so weird to see the market punishing or questioning so much an AI company. For the most part, AI companies have just been gold and can do no wrong. So this is a very odd one to me for that reason. I know it's specialized, but still.
It's an outlier, no doubt about it, Heather, for sure.
Ashley, as an AI specialist, where do you see the importance of the different types of AI models and like large language models versus this like language or this spoken language? What is this model called technically? Do you know? Where do these fit in, and is there a need for all of them? I would think yes.
So I definitely don't have any specific brand loyalty. I've had favorites, and what I preferred to use 3 months ago isn't what I prefer to use today, and the same was true a year ago and even a few years ago. So in my opinion, in actually working with the models, they have different strengths, and what you can use one for isn't necessarily what you're going to solve the next problem for. And so having a familiarity with the front runners and what they're good at is powerful. And then, I'm meeting with folks that keep surprising me because a lot of businesses, they don't want to infuse their secret sauce recipe and put their IP, pour it into these models. They're concerned about handing over that information. And so there's a lot of shops out there that are choosing to build versus buy, and are not even participating with these models. And it'll be really interesting to see how proprietary we get as AI continues to advance.
Thank you.
So a neat confluence of a couple interesting topics here today. We talked about the investing angle of it. We talked about the AI agents model of it. We talked about conversations that are happening in our own video productions. Kind of neat to have Ashley and Heather sharing perspectives on SoundHound as an investment opportunity. Again, SOUN if you want to follow along with that. And please subscribe to our YouTube channel, especially some of the previous episodes that Heather and I were talking about SoundHound as we saw this kind of journey brewing and building up for the short squeeze that happened here in early August. I think it's still very possible we get another one of those in the near future. So great. That's SoundHound. That's for today's show. Thank you for tuning in. We're going to have our subscriber call tomorrow for 7 Investing's premium subscribers. If you do want to be a subscriber, get access immediately to that. 7investing.com/subscribe. You can actually get your first 7 days completely free of membership to 7 Investing. All the exclusive content, access to the subscriber call, the newest recommendation, and then of course, the 5 best buys that we publish in for August here next week. So I appreciate all of your support for the channel here, for anyone who's a member of 7 Investing as well. Thank you, Ashley Wilson at Jaw Analytics as our special guest here today. Thank you, as always, Heather Horton, for being executive producer of our show. I hope you all have a wonderful rest of the week and a wonderful weekend again. We'll see you on Monday. Take care in the meantime.